Today on the Gold Standard.
I had a client that came in last week, said that she had a lot of money at IndyMac Bank in 2008, and they kept $100,000 of her money. She had $500,000 in the bank, and they kept $100,000. And then what they told her? You should be glad that you're at least getting that.
Wow.
That's what they told her.
This is the Gold Standard from Midas Gold Group with Kenneth Russo. Hello, I'm Dave Dino. Welcome to the Gold Standard, your source for secure investment opinion and information on the advantages of purchasing and owning precious metals. Whether you're a novice investor or an experienced collector, this is the program that gives you a realistic weekly perspective on the state of the economy, reliable information about using precious metals such as gold, silver, and platinum to safeguard your wealth, and remarkable details about specific precious metal coins and bullion. Ken Russo is a senior vice president at Midas Gold Group. His peers characterize him as a straight shooter who will work harder for you than anyone else. Hey, Ken, it's a pleasure to join you again this week. How you doing?
I'm doing great, Dave. And before we started today, I just had a couple of quick questions for you, if I may interview you briefly.
Absolutely. Go ahead.
Have you checked your bank account balance lately, either on the computer or on your phone, to see if your money was still at your bank?
You know, it's funny you should ask that because I actually did check my balance this morning, and right now, my money's still there.
Oh, that's good. And your retirement account, the part that you didn't roll over into gold, is that still there? Is the brokerage firm still reflecting that you still have retirement account assets?
It is reflecting that I have it, although it kind of goes up and down by the day. I don't see it growing.
Mm-hmm. And it's obviously all just digits, and who knows really what it is anyway. Now, the gold that you checked in your safe this morning and you held on to it and looked at it, is that there?
That is there. I have to tell you, it's a great feeling to know it is there and it still has its worth.
There you go, right next to your gun. Fantastic. Well, I'm ready to start. I'm ready to start the interview now.
Our topic is how the banking crisis affects your money. This is a very serious topic, and it's ripped right from the headlines. Ken, we are not the ones to say we told you so, but, well, we told you so. We told you that the U.S. economy was fragile, and any number of financial issues could cause a negative ripple effect on the economy, and it could do so very suddenly. By now, everyone is aware that two major banks, plus a cryptocurrency financial institution, have failed. And this prompts the question, how safe is our money? Ken?
Well, very relevant question for everybody that's listening and everybody that's out there, every single American. And the answer is no, our money and our banking system is not safe. Like we mentioned last week, it's one of the other biggest lies that we're being told, that our money is safe and that our banking system is sound. So it's relevant, Dave. We will look, obviously, eventually at the stability of gold. And the premise, Dave, that we've been talking about for years now, the bubble that we're experiencing right now is leveraged to the gills. There is so much debt out there. There has to be stuff that's going to go wrong. We mentioned even last week, before all of this happened, how many things could go wrong and how many things could actually go right. And when we talked about how many things can go right, the answer was, well, maybe the stock market goes up a little. That's it. Nothing else. So that doesn't even mention they're going to tear down the financial system. Doesn't even mention that the Fed is now deflating the same bubble that they inflated. It's another bailout. Biden bailed his Silicon buddies out. A lot of supporters, a lot of voters up there in the San Francisco and the Silicon Valley area. So it's a system that is just ready to explode. You remember the old cartoons, Dave, where there was a bomb. It looked like a ball, and then there was like a wick, and then they light the wick, and then it's burning until the bomb goes off. You remember those cartoons?
I do. A lot of Wile E. Coyote cartoons.
Exactly, and that's what we're looking at here when we're talking about the banking system. It's not an isolated instance, but it is an instance of these rising interest rates here, and the abnormally low interest rates that we've seen for decades, and the exponential money printing that's now all coming together. And how are these entities and these governments going to afford all of the interest on this debt. And the system today is going to be blown up by an implosion of the debt, which we talked about many, many times for years. The bonds are going to be a serious, serious problem. And it will affect every single one of us, as people can see, because the market's going to go down or our money's going to disappear, or possibly both. So we need to be very careful.
The question that we have is what happened? What caused these two banks that we've been reading about in the headlines? And they're two major banks. One is the 16th largest bank in the country, the other the 29th largest bank in America, respectively. What happened? What caused their failure and forced the federal government to step in and close their doors?
Well, obviously, it's a complex issue, but simply stated, Dave, there's not enough money at these banks if everybody shows up or wants to pull their money out. I mean, we've mentioned that many, many times. When you deposit your money at the bank is only required to keep like $1 out of every 10. So it's fractional banking, and there's probably, I don't know, maybe 20 more banks out there that I've read some reports on that are equally stretched out, and that's a problem. This was the largest bank failure since 2008 when Washington Mutual went under, which I'm sure a lot of people remembered. I had a client that came in last week, said that she had a lot of money at IndyMac Bank in 2008, and they kept $100,000 of her money. She had $500,000 in the bank, and they kept $100,000. And then what they told her? You should be glad that you're at least getting that.
Wow.
That's what they told her. So we saw a good old run on the bank last week where there was a bank that was facing a difficult business environment with all of the tech companies that are in Silicon Valley. Some of the largest clients that they have, depositors, pulled their money from Silicon Valley Bank last week, and it was forced to sell some of their distressed securities in order to raise cash. These are the bonds that they invested in way back when, at maybe like 1.7%, Dave. So now, as the interest rates have increased dramatically, the price of these bonds and the worth of these bonds has gone down dramatically. And you're talking about almost a $2 billion loss that the bank had to realize. And when the bank starts selling these assets, it becomes more evident about the value of their losses. So depositors started to realize this, and they started to withdraw their money from the bank on a big scale. Good old bank run, Dave. Everybody's just trying to move their money out of the bank at the same time or show up at the bank waiting in line to pull your money out. I'm sure people out there saw all the pictures, but it's just a question of these banks are too leveraged. The system that we're in, I hope people realize, I'm going to say this again, there's not enough money at these banks if everybody showed up at the same time. There's not enough federal deposit insurance that covers these accounts. That's another sham that we can talk about another week. So whether if it's Silvergate Bank or Signature Bank, which also closed on Sunday, or Silicon Valley Bank, which was taken under receivership on Friday, they all went under, but customers were spooked. They wanted their money. And I don't know how many times they have to be shown or we have to talk about it. There is not enough money at the bank for everyone if we showed up and wanted to take it out, which obviously is a serious, serious problem for the average person out there as they realize that their money is not safe. They realize that these banks and these governments are drowning in debt, and there's got to be other situations out there, Dave. So that's the situation we're in today. Is this going to happen again? Of course. Are we in a 2008 situation? I would say not yet. I don't think that this is an isolated case because we're drowning in debt. So if interest rates are rising dramatically because the Fed is trying to fight inflation and they're behind the curve, and we've talked about that many, many times, and they've never done anything right. Why would they be right this time? There's going to be more people that are drowning in debt. And what about commercial real estate when all these interest rates go higher? This financial system, Dave, is on fumes. And this is almost like a last-ditch effort to try to convince people that their money is safe. What the Biden administration did by bailing out the depositors at Silicon Valley Bank, it's like the last-ditch effort to convince people to stay in the banking system and to convince them that their money is safe. Well, folks, it's not.
A reminder here that you are listening to The Gold Standard with Ken Russo from Midas Gold Group. And our topic today is how the banking crisis affects your money. So, Ken, how does gold and silver protect our cash and investments from being ravaged by such reactionary actions?
Well, and that's what's really relevant about our discussion, right, Dave?
Yeah.
And it's a complex issue. The financial system's very complex, and I'm sure that there's a lot of people that could explain what happened at the Silicon Valley Bank a lot better than I can. But the fact of the matter is, if you were a business or you were a customer and you wanted to pull your money out on Friday or Monday or whenever, I don't even know if it's still been corrected, you couldn't do it. So that means that you were frozen out of your money, which is not fair. But unfortunately, that's the situation of our money. So it makes absolute no sense, Dave, to keep all of your money in the bank or to keep all of your money in the markets, because we will see more of this. Now, what you can do is you can think about diversifying. You can think about hedging your bets. One of the easiest things you can do is you can convert some of that money while you still can, which is important, while you still can move that money out of the market, or while you can still move that money out of the banking system, and you can convert it into some gold that's not part of the banking system, gold coins or gold bars that you could hold on to. And you know as well as I do, Dave, gold is a crisis investment. It's a financial crisis asset. It traditionally holds its value. When economies fail, it will grow over time as it will reflect what our dollar loses. It should outpace inflation. Do you realize, Dave, that they have to raise the interest rates more than what the inflation rate is to try and combat what's going on with these inflation numbers, which are already a lie? So that means that if inflation is 8 or 9%, that means that interest rates need to be 10 to 12% for us to kind of cool things down. What do you think is going to happen to the banking system and the debt and the average consumer out there that has a lot of debt when interest rates are over 10%? Well, it's going to be ugly. That's what's going to happen.
And we're going to continue our topic, how the banking crisis affects your money, a little bit later in the program, and we'll highlight several tangible ways you can convert your wealth into the security of gold. But first, a reminder that you are listening to The Gold Standard with Ken Russo from Midas Gold Group. And coming up, we're going to look at a specific precious metal that you can use to safeguard your wealth, and that's coming up right after this.
Sebastian Gorka here with a special treat. I believe in Midas Gold Group, in what they do, and I appreciate their America First patriotic views. I'm with a client of Midas, Los Angeles Music Awards Singer-Songwriter of the Year, Dee O'Malley. Dee, you're a real client. Midas hasn't paid you anything.
True, but your recommendation was priceless. I am so grateful for your advice to call Midas Gold Group. I've always supported veteran-owned companies, especially those who stand up for our values. Midas Gold Group far exceeded my expectations. They are true professionals who make you feel so at home with straightforward answers to the most basic and complex questions. All the friends and family I've referred to buy gold or discuss a gold IRA are so happy with the service, value, educated advice, and peace of mind that Midas provides.
Dee, I'm told that you and your songwriting partner, Cindy Walkoff, were so inspired that you wrote a jingle about Midas Gold Group. Can we hear it?
Absolutely. Great companies deserve great jingles. Play it, Sebastian.
Midas Gold, the one-stop find, your ultimate in peace of mind.
Friends, talk with Midas Gold Group like Dee did about protecting your wealth with the stability of physical gold. You'll also be singing their praises. Go to MidasGoldGroup.com, or better, call 855-322-GOLD, 855-322-GOLD. It's gold you can hold, 855-322-GOLD.
And we're back with more of The Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Dino, and our topic today is how the banking crisis affects your money. By the way, if you live in the Los Angeles or the Phoenix area, you can actually come and visit our local office to meet with us in person. For the address and directions, just log on to our website, MidasGoldGroup.com. MIDAS, MidasGoldGroup.com. And for those of you listening in other cities, call us directly at 855-322-GOLD, 855-322-GOLD. By the numbers 855 855-322-4653. Now, it's time for our precious metal spotlight of the week, and today we have a rather new gold coin, and it's one that really intrigues me. It is called the Big Five Elephant Gold Coin. Ken, this is an unusual gold coin, isn't it?
Yeah, it is, Dave. And, we usually like to talk about other coins that are a little more popular, but this week we can spend a little bit of time about this coin. This is a 24 karat gold coin of South Africa. It's a new coin and definitely something for some investors to consider investing in and diversifying in an actual gold, 24 karat gold product.
I have to say, I really love the very unusual design feature of my 1 ounce Big Five Elephant Gold coin. Maybe you can describe that feature for our listeners.
Well, they're actually designed, Dave, to be bought in lots of several. The Big Five Elephant coin has a portrait of a savanna elephant dominating the obverse or the head side of the coin. Here's the unusual design, Dave, feature that you were pointing out. Designer R.C. Stone created the reverse layout, which depicts the partial heads of two elephants crowded next to each other. The two elephants seem to overtake the reverse side of the coin. The two halves of the elephant's face are meant to form one elephant when two or more coins, Dave, are placed next to each other or together. It's a great idea, makes the coin very unique. It's kind of like trying to put together an entire herd of elephants, but yeah, very expensive gold elephants. I think this coin, Dave, will appreciate dramatically over the next few years because, folks, as everything we're talking about will weaken our dollar. As they print more money, our dollar gets weaker. As the debt situation of the United States gets bigger, our dollar weakens. As the strength of our banking system and the safety of our money decreases, as the safety of the banking system decreases and gets less, the value of our money also loses value and our dollar becomes less. And the gold 1 ounce South African Big Five Elephant is a great gold coin, as well as many of the other gold coins that we talk about, to consider as a way to diversify, to lower your risk from all of these banking situations.
I really love having this in my collection. Coming up in a moment, we're going to continue our topic, how the banking crisis affects your money, with Ken Russo of Midas Gold Group, right after this.
Did you notice in the State of the Union speech, Biden doubled down on his spending plans, adding even more to the federal deficit? That doesn't bode well for the value of your money. Sebastian Gorka here. Biden's disconnected view of the economy means there will be no meaningful steps taken to lessen inflation and lower interest rates. Your cash reserves and investments will be worth less, which is why I recommend calling veteran-owned Midas Gold Group to look into safeguarding your wealth with the stability of gold while you still can. Gold traditionally holds its value when economies fail, guarding against the destruction of inflation and the ruin of a recession. Don't let Biden's misguided economy wipe you out. Talk with the good folks at Midas Gold Group. Go to MidasGoldGroup.com or call 855-322-GOLD. That's 855-322-GOLD. It's gold you can hold. MidasGoldGroup.com, 855-322-GOLD.
And we're back with more of the Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Dino, and our topic today is how the banking crisis affects your money. As we have been saying, if you live in the Los Angeles or Phoenix area, you can actually visit our local office, meet with us in person, even see some of the gold and silver and platinum products that we talk about. For the address and directions, just log on to our website, MidasGoldGroup.com. MIDAS, MidasGoldGroup.com. And for those of you listening in other cities, call us directly at 855-322-GOLD, 855-322-GOLD. By the numbers 855-322-4653. Now, let's get back to our topic. So far today, we have talked about the collapse of two major banks and the government's plan to bail them out. And we have compared that to the historic stability of gold. I want to wrap things up. For those who have never invested in gold or silver, Ken, how do you make that process easy and reliable?
Well, there was a time, Dave, where you never invested in mutual funds, and you started doing that, right? And there was a time where you probably never had a bank account, and you walked into a bank one day, and you started that. And you're probably one day where you didn't never had a mortgage before, and you started that process. So this is another process that you need to deal with people that you can trust and that you could rely on. And being a veteran-owned gold and silver dealer, we've taken a lot of pride in fighting for freedom, and now we fight for financial survival. So we would encourage people to create their own gold standard. We would encourage people to create their own retirement survival kit, and that involves the ownership of gold. So give us a call. Visit us at MidasGoldGroup.com. We're here Monday through Friday from 8 to 4 Pacific time. We're more than happy to return phone calls. We're swamped, but we will get back to you no later than the next day. Put together a plan. Everybody's a little different, Dave, but it's not anything that's involved. It's a very simple process. There's some basic gold products that we like to talk to our clients about, some basic silver products that we like to talk to our clients about. There is a process where you could protect your retirement funds and roll over an old 401k or a 403b, or transfer an existing traditional or Roth IRA, get it out of the banking system, get it out of the brokerage system, and get it into a non-bank depository where they'll hold your gold and your silver in your retirement account until you decide that you want to take it out. But these are all of the steps, Dave, that every single person out there should be taking right now, so that when we see banks go down and hedge funds go down and other financial institutions go down, your money is not all at risk. At least this way you have some money out of the system. You have something that you can turn to, something that your family will know that will be there no matter what. And as the track record of gold goes, Dave, it will always have value. It will always be a store of value, a medium of exchange. And in this particular market, just like the last few thousand years, the only form of true safe money is gold. Everything else is fake, including the system and including the money that we deal with every day. Says it right on it. Federal Reserve note. It should say fake note right on it. But that's what we have. And the only thing we can do is protect ourselves from being in a bad situation. And yes, folks, when you have 32 trillion in debt, probably it's over 100 trillion easy. And when the world is drowning in $300 trillion in debt, and when there's quadrillions of dollars of derivatives, is it going to get nasty and worse? Absolutely. But that doesn't mean that you have to lose all of your money. And the reason why that you can say that is that the ability to own gold is there. The ability to diversify in some gold and some silver is there. And we would be privileged if you gave Midas Gold Group a call. We could educate you on it and give us an opportunity to try and get you diversified in much safer situation today.
Ken, you always give us good advice week in and week out. First and foremost, I profit from your advice, and I know our listeners do as well. That's going to bring us to the end of our time together today here on the Gold Standard with Ken Russo, brought to you by Midas Gold Group. A reminder, opinions given here are not intended to be specific to your investment strategy, but rather general information to give you a better understanding of investing in precious metals. For answers to your questions, call Midas Gold Group at 855-322-GOLD. 855-322-GOLD. By the numbers 855-322-4653. And the website is MidasGoldGroup.com, M-I-D-A-S, MidasGoldGroup.com. The Midas Gold Group is proud to be America's #1 veteran-owned gold dealer, supporting veterans' causes with a portion of profits donated to the Wounded Warriors Project and the Semper Fi Fund. So your investment in your future is also an investment in the future of those who have already bravely served the cause of freedom. Again, the number to call to speak directly with Midas Gold Group is 855-322-GOLD. Ken, thank you for your time again today.
My pleasure, Dave. I wish we had a happier topic to discuss, but there is a parachute out there. There's a lifeboat, safety boat for people. It's called gold. So there is something we can do about it. But yes, I had a good time, and nice to talk to you as always.
When we talk about gold, that is the one thing that does bring happiness to me when we're talking about financial matters. I'm Dave Dino. Come and join us again next week at this same time for another edition of The Gold Standard.
The Gold Standard was brought to you by the Midas Gold Group.